Sheila from Cabot contacted us with a great question, and this is one that we haven't really addressed on the Get Ready for the Future show at all that I'm aware of, but she's asking a great question because this is becoming more and more popular for people to take a look at. And she says, I'm approaching age 62, and I'm hearing a lot about reverse mortgages these days. I'm considering getting one. What is your opinion? So let's first of all talk about what a reverse mortgage is. It is exactly what it says. Instead of you paying a mortgage payment, if you qualify for a reverse mortgage, then they will actually pay you a payment based on some calculated value of your home. And it basically relieves someone of a mortgage payment in retirement and provides actually an income stream. Now, Janet, what could be wrong with that? I get rid of my mortgage payment and I get income coming in. That's a great deal, right?
I will say the devil is in the details.
There you go.
And in the details of a reverse mortgage, you will often find a devil. I will just say it that way. This is, for some small portion of the population, a wise move. But for many people, it is not. And it is more of a curiosity of, hey, I got this thing in the mail and says I'm probably eligible for a reverse mortgage. What is that? And man, I sure would like to get a check instead of giving a check.
Let me interrupt for just a second and say we don't recommend reverse mortgages at GenWealth, and it's just not something that we think is a viable tool. So with that caveat, let's do some education.
So there's a few just question and answers to go through to determine if you should even remotely consider this. So the first one is, are you age 62 or older? If you are not, then you are not eligible to do a reverse mortgage, so you at least have to pause the conversation for a period of time. If you are 62 or older, then we can proceed to the next question. The next question is your home your primary residence? If the answer is no, then again, you're not eligible to do a reverse mortgage and we'll just move forward. If the answer is yes, then John, that moves us to the third question.
It does. And you have to know a couple of things. Is your home one of the following? Is it a single family home or a 1 or up to 4 unit home? Is it HUD approved condominium, or is it a manufactured home that meets FHA requirements? Now, most people have a single family residence. It's a site built home and that type of thing, but there are some qualifications if you fall into those other categories. And if the answer is yes on those, then you can proceed. If it's no, then you don't qualify. But if you proceed, then the question that you have to ask is, are your payments up to date on, or are you past due on any federal debt? Now, obviously, they're not going to give you a reverse mortgage if you are 2 payments, 3 payments behind on your mortgage. This is not a bailout that you get to save your home from a bankruptcy situation or something like that.
So you need to consider some of the pros and cons on this. One of the things that I think is very important is, what is your objective with the home long term? And by long term, I mean after you're gone. Is it important to you that that home go to your family? As an example, I grew up on a family farm, and there are some houses that have been in our family for generations now because of where they are. It is relevant to the farmland and all of that, and so we have kept those residences. That's something where it would have been a bad decision for somebody in my family to utilize a reverse mortgage, because that house needed to stay in the family in the future. So think about whether that is important for future generations.
Janet, I think that there are some other considerations. Do you have an immediate financial need? Do you need this income that would come in from a reverse mortgage? If the answer is yes, then it might be worthy of considering. But also, you kind of alluded to this, do you want to keep your home in your family? Because the way a reverse mortgage works is essentially you're building up more and more and more debt on that home. And when you pass away, then the mortgage company is going to own that home. It is not going to be something that gets passed along in your will or trust or anything of that nature. They literally own that home.
Yeah.
And if your kids want that home, then they have to go buy it from the mortgage company.
Right. Another thing to just be aware of is, usually when you have a regular mortgage, not a reverse mortgage, when you have a regular mortgage, you are paying the taxes and the insurance on the property. So many times people assume that with a reverse mortgage, the company that's paying that reverse mortgage is paying those things. That is not the case. If you get a reverse mortgage, you are still responsible for paying the taxes and the homeowner's insurance and keeping your home in good repair. If you don't do those things, you can face foreclosure on the home, even though they are buying it from you.